Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Forex Quick Look. I'm going to take a look at the dollar versus Canada. They had their employment statistics come out today as well. Let's review it and see what the technicals are telling us now. So let's get started. First, a review of the employment data. The employment change showed a rise of 40.7 thousand. That was higher than the 28,000 expected. Last month, recall, it rose by 37.3 thousand. So two strong months in a row. But the difference this month is that the full-time employment added 70.6 thousand. That compared to a minus 11.6 thousand last month. The part-time employment fell about 30,000. Last month, it rose about 49,000. So a reversal of the full and part-time. Of course, full-time employment is a stronger measure of employment. So that's good news from the employment perspective. The unemployment rate came in at 5.8%. That was as expected, a little tick up from the 5.7. And the average hourly wages permanent employees declined to 4.9% from 5.3%. So the dollar versus Canada initially moved to the downside here, but we are seeing a little bit of a rebound, but that rebound seems to be wanting to hold against the 38.2% retracement of the move of the broken 38.2 of this move to the downside here. That 38.2 comes in at 1.34525 in trading this week. The price action, and actually trading last week, the price action moved above both the 50% retracement level and the 100-day moving average. Those are these levels right here near the 135.37 level. You can see how the price tried to stay above those levels in trading this week, but then gave up the ghost midweek, falling below the 100-day moving average, falling below the 50% retracement, then fell below the 100 bar moving average on the 4-hour chart right here. And then in more recent trading yesterday and today, the price also fell below the 200 bar moving average on the 4-hour chart and the 200-day moving average. I guess that all that happened yesterday or even on Wednesday, it looks like. So this is the 4-hour chart. So things turned more to the downside, and we reached a new low in trading here today. But we also approached what was a key swing area through here, where we had a number of different swing highs coming here, forming a ceiling here, and then we started to trade above and below the level, finding resistance against the 200 bar moving average before breaking above this ceiling area, and then using the level as a support to move to the upside. Came back down to the area right through here and here and here and here. Finally, trading above and below it through this volatile period here as the market decided which way it wants to go. That would led to the upside, and then we reestablished support here. So we are moving back down toward that level, and you can see there's a number of different arrows there. Sorry to jumble up the screen, but you get the point that the 133.98 up to 134.14 is a key level, and the price low in trading here today came down to 134.19, just above the high of that swing area, and finding some support buyers. But as I mentioned, we are trying to stay below the 38.2% retracement at 134.52. If we can stay below that level, we'll keep the sellers more in control. What we don't want to see for those traders looking for more downside in the dollar, more upside in the Canadian dollar, is a move above the 200 bar moving averages here. That would be a no-no from a technical perspective, getting back above the 200-day moving average, getting back above the 200 bar moving average on a 4-hour chart. So that becomes a risk-defining level for traders looking for more downside in the dollar versus Canada. If stay below those levels, and the sellers remain more in control. But the best case scenario is to stay below 38.2% retracement and work on getting below this swing area if the sellers are going to take more control in the U.S. dollar versus Canadian dollar. That's my technical look at that currency pair. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.